Why interest rates became Australia's biggest talking point, and what it means for you. Interest rates, once a topic for economists and bankers, have now become dinner-table conversation across Australia. But why are they such a big deal? And what do they really mean for everyday Australians? At its core, an interest rate is simply the cost of borrowing money. When the Reserve Bank of Australia, RBA, raises rates, loans and mortgages become more expensive, cooling inflation but squeezing households. When rates fall, borrowing becomes easier, boosting spending and, often, house prices. Over the past 2 years, Australia has faced one of its toughest economic adjustments in decades. After a rapid series of interest rate hikes to combat inflation, many Australians have felt the pinch. RBA Governor Michele Bullock said in her latest statement that inflation remains higher than ideal, but we expect it to return to target by 2026. She emphasised that decisions are made with the aim of restoring price stability without breaking household confidence. Treasurer Chalmers echoed that message, telling reporters, "Australians are under real pressure, and our priority is easing the cost of living while maintaining economic resilience." The government has rolled out targeted energy rebates and rent assistance, while urging patience as monetary policy takes effect. For ordinary Australians, the impact is deeply personal. Homeowners with variable rate mortgages have seen monthly repayments rise by hundreds of dollars. Young people are delaying their first home purchase, and retirees relying on fixed incomes are struggling to keep up with everyday expenses. Yet some savers are benefiting. Higher rates mean better returns on term deposits and savings accounts. Globally, Australia's story fits into a larger pattern. In the United States, Canada, and the United Kingdom, central banks are wrestling with similar inflation and housing pressures. However, Australia's smaller population and heavier household debt levels make it particularly sensitive to rate changes. Economists from the University of Sydney warn that Australia's reliance on property wealth makes it more vulnerable than many of its peers. So, what can Australians, and anyone watching, do about it? Financial advisors suggest focusing on flexibility, reducing unnecessary debt, building emergency savings, and avoiding panic decisions during uncertain times. As the RBA continues its cautious approach, the key is to plan for a slower, steadier recovery rather than a quick fix. In the end, Australia's fascination with interest rates isn't just economic, it's emotional. It reflects the nation's deep connection to home ownership, financial security, and the dream of stability. Whether you're in Sydney, Toronto, or London, understanding this story helps you grasp the global balancing act between growth, inflation, and human resilience. Because even if you're not in Australia, the same question matters everywhere. How do we keep our finances, and our hopes, steady when the world keeps changing?